Bill?
All set.
So we're not touching Stickney,
No.
correct?
Well, town meeting approved the 150.
Yeah.
So just on that, I know they approved it, but the town administrator just informed me that we can't do a bond anticipation, a revenue anticipation note. What's the balance in the Stickney going to be, or what is it now, and what's it going to be?
Right now, if that 150 is removed from the sticky, it's 123,000.
And I know we talked about a revenue anticipation note, which apparently Department of Revenue said no. Again, we're anticipating, I thought, if I heard you correctly before, that anticipated revenues would probably cover it, but again, we were going to possibly use the 150 if needed. And now we're saying we need it?
Finance department indicated to us that they need it. They need it now, correct. Now,
Well, didn't that money have to be squared away before the
That
end of
number,
the year?
they would not have set the tax rate.
Right.
Without
Okay.
having that number
Right.
squared away.
so that had to be deposited, if you will, in the equation. Now, the board can say to the water department, we want the 150,000 out of retained earnings, reseeded into the sticky fund. And that's certainly doable. It's not doable this year or next year, but it's certainly, with this plan, it's doable. If that's the wishes of the board.
The wishes of one member of the board, anyway.
I,
And again, I think, based upon what I had heard previously, and I haven't heard any differently here, really, that we were anticipating enough revenue to cover the deficit
By the end of this fiscal
by the end
year.
of this fiscal year. And that was without the $150,000. What we're talking about is putting the $150,000 up front in the anticipation of those revenues, and then we're talking about not paying that back. I mean, to me, it's almost like you should be doing a passbook loan, if you can't do a revenue anticipation note. A passbook loan on the sticky, well, to use it as the last resort if you have to make it up before June 30th. But if you've got the revenue, if you have the revenue, use the revenue first, then Stickney as the last resort. But that's not what I'm hearing now, is,
well, it's only because a commitment had to be made to DOR in order to set the tax rate, and you couldn't say if we raise the money.
and I understand, that's like a passbook loan.
Yep.
It's like a passbook loan.
We could say, Steve, that at the close of this fiscal year, after the free cash is lifted and the accounts are reconciled, then in October, we make a transfer from water surplus into the second fund.
But we can wait till that.
That's
till
the
town
earliest you
meeting
could do
to
it right now, I think.
Right, but if that's the case, I'd like the board to go on record as to that's what we would like to see done. Because again, I think the Stickney fund should be used not to cover a deficit, but to cover capital expenditures and for infrastructure improvements to the system. Again, you use it as a shell game here, but again, once you take it, it's gone, and it's difficult to get it back. And to me, I'd like to have it as a last resort rather than a first resort, even though you're committing it up front. And to me, I think it's important for the board to maintain the integrity of the Stickney fund and also see that it lasts for its intended use. And years ago, committed to using it to offset capital improvements to the infrastructure of the water system, not to cover a deficit. So I don't know how we could word it or should word it, but I'm certainly in favor of going forward with the proposal with the caveat that once the books are closed, that the anticipated revenues of what they were are anticipated, then cover it.
The deficit coming into the year is $338,000. At the way the rates are now, we're anticipating about $210,000 surplus, so we've still got $130,000 deficit. What's being recommended tonight is it would generate the full $44,000 you're seeing in the bottom corner there, and if you implement the 2% rate increase, that'll account for about another, I think, $23,000 this year. So you got 44 and 23, 67. You're still going to have between $67 and $130,000 that this rate recommendation is not gonna cover. If you want sufficient revenues generated in this year to cover that multi-year deficit, we'd have to do something significantly more drastic than a 2% rate increase. So I think we need to know that we will be touching some of that sticky fund money. If it's the wish to pay the whole thing back, that's certainly something to be addressed, but at the recommendation that's being made now, we're not gonna cover that full $338,000 without.
I think we can wait until, I understand your argument, but I think we can wait until closer to October town meeting to see what the numbers look like and then decide to do that. I don't think the
Well, that's fine, but
principle of what you're saying is wrong, but I mean, voting to do it when we don't know if we can do it because of these issues, I don't see
Yeah, I
anything to
just
do
wanna
that.
make sure,
But
if you have to close the gap and you have to use $60,000 or $70,000 rather than the whole $150, you know, then that's what you have to do in order to close the books out and meet the obligations that we have with Department of Revenue is mandating us to do.
The question that I asked a while ago, I don't recall just what the answer was, if we got an answer, was if we looked at the debt that we've had at the end of each year, right, and its rate of growth, or has it just been flat, that every year we've closed, we've been in a deficit? Because that tells a lot. I mean, all that means is we've got this shift, and we're trying to fill this one time.
But put the finger in the dike. Use a sticky to plug it.
So if we looked at the past 3 years, and we looked at the year end, what the water deficit was, which we're making up the preceding year, basically, right? Was that a growing number? Was it flat? Do you know?
It was growing up until peaking, as Mark said, this is.
No, but I mean, was it, we've had this deficit problem for several years, right?
Yes, 5 consecutive years.
5 consecutive years. So it's been growing a little more each year. But it's not the whole number in 1 year,
Correct.
because we've had to take money out of water revenue the preceding year to
Correct.
Prior year bills
pay
carried
the
over.
prior year's bill.
Right.
So the increases should start to, and I think that's the point they were trying to make, should start to fill that gap and get us ahead with the surplus. So we may not see the surplus, you know, at the end of this year to put back into sticking. But I tend to agree with you. It would be nice to take and at least put into words somehow that.
As we did in Hillview, as far as the payback of the payment in lieu, we built up a account, basically with what we owed the town, a payment in lieu, and then when we were able to do it, we paid it back. And wrote it off the books, but we carried it forward, knowing full well that we had that obligation. And once the surplus was built up to a point we could pay it off, we did.
So can we create a second motion, or do we wanna make this just a desire of the board, or? What do you wanna do, Mr.
In this particular case, again, I still think it's important that we go on record as to what we would like to see done. You know, and, you know, if it takes 3 or 4 years to pay it back, and 5 years to pay it back, then it takes 3 or 5 years to pay it back, but at least dignity restored and the money's being supplied from where it should be supplied, not a one-shot deal. Sticking is just a, you know, a finger in the dike. Revenue that shouldn't be used to maintain the system
No,
to cover the cost, so.
I fully understand where you're
Right.
coming from on that, because one is a annual cost operating expense, and the other is, you know, the sticking was strictly supposed to be for capital.
Right. So,
Uh,
again, I'll have to
don't
the
know
wishes of
what
the majority, but I think we need to go on record this evening as to what our intent is, or what our desire is. And,
I think our desire is to replace the dollar amount that's removed from Stickney
For retained earnings.
from retained earnings.
retained earnings, and again, if you can have the administration set up an accounting of it, then I'm satisfied. So at least we can see where we're at, and then, and how we're doing against it. Now, whether it's done 1 year, 2 years, 3 years down the road, that's fine.
Okay.
This is some form of non-binding vote. We were voting what our intention is. Am I right on
We
that?
can make it a binding vote.
I don't want it to be a binding vote. I don't think that's right. We ought to wait till October town meeting when we know what the numbers are, and then we bind.
I'm not saying to do it this year.
You're missing, I
I'm
think,
not saying to do it this year.
Okay, but I
Saying
think what
is
you're
that we're
saying is
making-
that there's no vote to be made here. It's just a matter of expressing our intentions. I guess that's okay with me, but it's not, I wouldn't be in favor of any kind of binding vote. We don't know any numbers. How can you bind them to
no, I think,
commitment that we don't know
Phil, I
numbers
think
to?
what Steve is saying, what was the amount we took out of Stickney?
150.
Well,
We've authorized up to 150, but you might not use all 150, correct?
Well,
Or are you
just for
kidding
the
me,
purpose
Joe?
of saying was 150, right? So that was capital money.
Right, no, I understand
And
that.
we moved it over,
Right.
we gave the operating expense budget alone.
I understand that.
We're raising the rates to generate a surplus to replace the money we took out of the capital fund.
Yeah. No, I understand that. Then the
That can
thought
be
is
a
we pay
vote.
it back.
That can be a vote. It can
Pay
be
it back,
paid
but
back
but-
over the next 5 years.
I won't vote to commit to something that I don't know the numbers to. I don't think that's right. I don't think that's right. I understand the principle. I don't have any problem with the principle. Saying, and if that's the vote is that, you know, what we, that's what originally Steve said, was that what, you know, what we intend to do, what we'd like to do, like to see happen. That stuff's fine. But if you vote to commit, and we don't have any numbers, I don't think that's fair to put the water, in that
We
situation.
have a maximum number that they're talking about. You get a maximum of $150,000, which has been authorized by town meeting. I'm not putting a cap on the date line or timeline, but to pay it back through retained earnings. And again, that'll be determined every year when we go through the budgetary process as to what's available in retained earnings, what we have for capital projects, and how it's gonna be funded.
Yeah, I think it needs to
So
be
it's,
thought. I don't think it's that simple a vote. I really don't, and I'll tell you why. All right, here I'll tell you why, and then we go to a vote. Whatever you wanna do, everybody else does, okay? Problem is that they're talking about building up a surplus of $500,000, all right? Now you're talking about taking $150,000 of that, so now the $500,000 surplus is going to a $650,000 surplus. 150 back to Stickney, 500,000 in water resources. And the rates here we put on the third tier are high. I would rather, my first thought is frankly, that if we have extra money, I wanna see us be able to drop those rates to the businesses of North Reading. The suggestion you made, okay, to do what you said. So to toss on this number to go from 500,000 surplus now to 650,000 surplus, I think it's something we don't decide now before we see numbers and how things pan out over the next year or so.
Correction,
Sure, correct me away.
it's a $500,000.
What do they say, 500,000?
Yeah, it's $500,000, it's not 650, it's a $500,000.
But what about paying
Over
back to
five-
Stickney?
Over 5 years, the goal would be $500,000 that we came with.
And are you including the Stickney in that number?
At a town meeting vote,
Yeah.
in the 4th year or 5th year, you're going to take 150 out of retained earnings and put it back into the Stickney fund.
So you're agreeing that it would then be 350?
So there'll be 350.
Well,
Total
that's
But
different.
you've got an
That's
income
different.
stream that's
Yeah, that's my
that's feeding it.
The total aggregate is $500,000.
Including Stickney.
Yeah.
And the thing is, you've got Stickney would be then used for capital projects as it should be, and right now, you're talking about a $500,000 surplus, which is actually a false surplus, because 150 of it, you just plugged with
Yeah.
the
So
capital
there's
money.
only $350,000 left for water rate stabilization, if you wanna call it that.
Whatever.
So I'm open to suggestions, Mr. Chairman, as to how you think it could be worded and satisfy the majority, maybe.
I guess that's why you take a big buck.
That's why you get paid
share.
back. And you're a much more clear thinker than I.
We visit that at the annual hearing. I think it's important enough for the board on accounting of the surplus and what's on the plate for capital and what the rates are doing in terms of generating surplus and to address refunding that fund. I think that comes up.